Today we're diving into what I'm calling the healthcare carry. Now, if you're not familiar, a carry in the world of finance is when one single asset or one sector is so strong that it literally carries the entire market on its back. And wow, is that exactly what we saw today? Let's get into it.
So if you just glanced at the market close, you'd probably think, boring day. I mean, look at this. The S&P 500 basically didn't move. The Dow was down, a fraction of a percent. But that flat, calm surface, it's hiding an absolute battle that was raging underneath. We had two gigantic opposing forces at work today. So, what were they?
All right, the first and honestly the most powerful force of the day was a massive relief rally in the healthcare sector. And I'm not talking about a little pop. This was a sector-wide explosion that pretty much single-handedly kept the whole market from sinking. And leading that charge, none other than UnitedHealth Group, ticker UNH. You gotta remember, this is the biggest healthcare company in the world. So when this stock moves, it doesn't just make waves, it makes a tsunami. And today, the tsunami hit.
Just look at that number, up more than 9% in one day. This wasn't just a good day, folks. This was an absolutely monster breakout from what has been a brutal multi-month downtrend. So the really important question is, what in the world could cause a move that aggressive?
And here it is, the why. It all came down to a decision from the government. See, for months, the market has been totally panicked that the reimbursement rates for Medicare Advantage plans were going to get squeezed, which would have crushed the profits. But instead, the regulators came out with a rate increase that was way better than anyone's worst fears. And just like that, poof, all that risk vanished, and it triggered a flood of buying from the big institutions.
Now here's where it gets really interesting. This great news wasn't just about UnitedHealth, it created this powerful tailwind that lifted the entire sector. You know the saying, a rising tide lifts all boats? Well, this was it in action. Let's look at another big player, Humana, to see what I mean. Bam! Humana surged almost 8%. And this makes perfect sense because their business is super focused on these Medicare Advantage plans. For them, this news was basically a direct lifeline. It pretty much saved their earnings models for 2027, and it confirmed that this wasn't just a one-stock story. Nope, this was a full-blown sector-wide breakout.
And all of this is a perfect example of a key market concept, regulatory relief. It's exactly what it sounds like. It's that moment when a government or regulatory decision comes out and just removes this giant cloud of uncertainty that's been hanging over a stock or a sector. The fear just evaporates, and all that money that was sitting on the sidelines comes rushing back in. That's precisely what we saw in healthcare today.
But okay, while healthcare was popping champagne, there was that other opposite force I mentioned. Something was dragging the market down. So let's pivot and look at the other side of the story, the big hardware stumble in big tech.
And the main anchor weighing everything down today was the biggest of them all, Apple. So while UNH was acting like a pillar holding the market up, Apple was doing its absolute best to sink the ship.
A drop of over 2% might not sound like a lot, but for a company of Apple's size, it's a huge deal. That move alone creates a major drag on big indices like the S&P 500 and the Nasdaq. So what was spooking investors in what's supposed to be one of the safest companies in the world?
Well, it wasn't just one thing. It was kind of a perfect storm of bad news. First, we got reports that the foldable iPhone, the one everyone's waiting for, is facing engineering delays. Then, on top of that, data showed that App Store growth actually slowed down in March. In a market that's already on edge, with oil prices being so high, investors just weren't in the mood to give an expensive stock the benefit of the doubt. They used all this news as an excuse to just sell and take some chips off the table before earnings.
So there you have it, this incredible tug of war. You have healthcare absolutely soaring on good regulatory news, and at the same time, big tech is stumbling over hardware fears. What does it all mean? Well, here are the exact takeaways you can bring to the water cooler tomorrow to sound like you've got it all figured out. First, on UnitedHealth, here's your line. UnitedHealth surging over 9% is the ultimate lesson in regulatory relief. When CMS came out with a 2.48% rate increase, it instantly de-risked the entire managed care sector.
Next up, for Humana, you can say this. Humana jumping nearly 8% on the CMS rate hike completely changes the narrative for the stock. This better-than-expected reimbursement rate essentially saves their 2027 earnings models.
And finally, for Apple, this is how you tie the whole day together. Did you see Apple drop over 2%? It shows that the market isn't giving mega-cap tech a free pass right now. Investors are clearly rotating capital out of high-multiple hardware and into defensive value like healthcare. Which, of course, leaves us with our final thought for the day.
Apple dropped over 2% today on reports that its foldable iPhone is facing engineering delays. So let me ask you, does a hardware delay like this actually change your long-term thesis on a company like Apple, or is this just a classic buy-the-dip opportunity?
Let me know what you think in the comments below, and don't forget to subscribe to Market Fluency for your daily edge.